Before we begin today's episode, I want to acknowledge that we are recording on September 11th, a day of remembrance. Today also brings news of another tragedy. Conservative activist Charlie Kirk was killed yesterday, leaving behind a wife and 2 children. In moments like these, we face a choice. Let tragedy divide us further or come together despite our differences. At Inspired Money, we've always believed that while we may disagree, we share common ground in wanting security, opportunity, and a better future for our families. I believe that we are better together, not in spite of our differences, but often because of them. Violence has no place in our discourse. Our thoughts are with all families touched by loss. Now let's turn to our topic today. Aloha, Inspired Moneymaker. Thank you for tuning in. If this is your first time here, welcome. If you're returning, welcome back to Inspired Money. I'm Andy Wong, and today we're tackling something that has everyone talking, crypto. Since President Trump threw his support behind digital currencies, Bitcoin has been on a tear. New investors are flooding in. Suddenly everyone's asking, should I be in it? Should I be in this? Investing in cryptocurrency is not for the faint of heart. The volatility can make even seasoned investors queasy. I've watched portfolios swing 20% in a single day. That's not normal market behavior. That's crypto. But after 26 years in finance, what fascinates me is this. Blockchain technology is not just about making a quick buck on Bitcoin. It's a disruptive force that, when deployed responsibly, can empower users, reduce corruption, and fundamentally change how we think about trust in financial transactions. Digital currencies may not be for everyone. Maybe they're not even for you. But even if you never buy a single Bitcoin, understanding this technology matters, because blockchain applications are already reshaping industries far beyond crypto, from supply chains to healthcare records to how we verify identity online. I promise you a thoughtful episode that aims to inform, educate, and inspire you. Before I introduce our guest, a quick thank you to our sponsor. This episode of Inspired Money is brought to you by Seeking Alpha Premium, the ultimate platform for serious investors who want an edge in every market. With Seeking Alpha Premium, you'll unlock expert analysis, stock ratings, and powerful tools that can help you make smarter, more informed investing decisions. For a limited time, Inspired Moneymakers can get a $30 off a 7-day free trial. That's for new subscribers only. Just visit inspiredmoney.fm/alpha, ALPHA, to claim your offer. That's an affiliate link, which means if you sign up, I may earn a commission at no extra cost to you. Don't miss out. Seeking Alpha Premium, your edge in every market. And if you subscribe, it supports the Inspired Money podcast. Let's bring in our guest. We've assembled an incredible panel of experts who live and breathe this space. They'll break down the fundamentals, explore the expanding ecosystem, and help you understand both the risks and rewards. First up, we have Dr. Merav Ozair, a leading global expert on emerging technologies, blockchain, and responsible AI. With experience as a data scientist, quant strategist, and fintech educator at Cornell and Wake Forest, she's dedicated to democratizing technology and shaping ethical, inclusive digital innovation. Welcome, Dr. Ozair.
Welcome.
Next joining us is Sir John Hargrave, CEO of Media Shower and publisher of the widely read Bitcoin Market Journal, trusted by over 100,000 crypto investors each month. He's also the author of the upcoming book, The Intelligent Crypto Investor, a practical guide to building long-term wealth through smart crypto investing. I interviewed John back in 2021 about his book, Blockchain for Everyone. You can watch it at inspiredmoney.fm/206. Sir John, great to have you here.
Andy, good to be back. Always inspiring to be on Inspired Money.
Thank you for that. Our next guest is Chris Kline, co-founder and COO of Bitcoin IRA, the first platform that allows investors to hold cryptocurrencies directly in their retirement accounts. Since 2016, Chris has helped expand Bitcoin IRA into a secure, compliant, and trusted leader in crypto retirement investing. My one-on-one interview with Chris aired last week. That's where we sat down at iHeartRadio in Manhattan. If you missed it, you can find it at inspiredmoney.fm/279. Chris, good to see you again.
It's great to be here. Thanks so much. I feel like I'm in a group where I'm actually the junior here, so I'm excited to learn as much as I am here to share.
The key is learning together. And finally, we're joined by Nick Spanos, a true pioneer in blockchain and cryptocurrency. He founded the world's first physical cryptocurrency exchange, Bitcoin Center NYC, right next to the New York Stock Exchange in 2013. He holds patents for innovation like the multi-branched blockchain and blockchain voting. Nick, thanks for being here.
Oh, thanks for having me. Thank you.
So whether you are a crypto-curious person or a skeptic looking for answers, please stick around. In the next hour, we're going to cut through the hype to give you clear, actionable insights to navigate the future of digital assets. Let's jump right in and start with segment one.
Blockchain technology extends beyond cryptocurrency, offering decentralized, transparent, and secure systems for various industries. Unlike traditional databases, blockchain records transactions on a distributed ledger, reducing the risk of fraud and single points of failure. Decentralization enhances security and transparency by preventing any single entity from controlling the network. Smart contracts automate processes by executing agreements without intermediaries, reducing costs and errors. Real-world applications include supply chain tracking, digital identity verification, secure healthcare data management, and transparent voting systems. Advantages include security, efficiency, and data integrity, while challenges involve scalability, energy consumption, and regulatory uncertainty. Understanding blockchain's broader potential prepares investors and businesses to navigate the evolving digital economy. Its role in automation, security, and data management signals its impact beyond speculative markets, shaping industries that require trust and efficiency in digital transactions.
Merav, you've said AI stakes, blockchain authenticates. Can you share how you see blockchain providing trust and transparency in an AI-driven world?
Yeah, exactly. With the hype of AI at the moment, everyone is fearful that everything is fake, especially with the deep fake. But, there's a lot of other things like the bias and hallucination and everything else. But, just think about the deep fake issue of that. When you see a photo today, you always ask yourself, is it real? You see a video, is it real? We have seen, incidents with whether it's celebrities or politicians or anything, that they were fake. And we know, and there are also scams that have been, and in fact, it's been, a boon for criminals to use the deepfake, for expedite, the scams. So yes, as I said, AI fakes, that's what it can do. And with technology that is advancing, it can do it even better than ever. And it's going to do it even better and better. But so we need some authentication. We need to understand whether this is true. Am I looking at the real thing, or is it just someone trying to hallucinate me? So, and this is where blockchain comes into play, because blockchain, the whole idea of blockchain is authentication. Whatever you record on the blockchain cannot be erased. It is there forever. That's what we call it, is immutable. So whatever is going to be recorded on the blockchain, going to be recorded. This is and you can record, like a smart contract with all the information, like an NFT with all the information. So every let's say photo, audio, text, anything, basically anything that you can imagine, even this video can be authenticated on the blockchain. Now, it's just a pointer. It's not like you see the video. It's not that blockchain is not a database. So I want people to understand that that's not the purpose of blockchain. It's a pointer to where the data is, and this is where you can find it. Now, but you're going to point, to this information. It is immutable, meaning you get all the records of who put this information, when it was put, there's a timestamp, and cannot be erased. So it is authenticated. So you know whether it's true or not. You know who is the owner, who has done it, and whether you can trust it.
So true authentication.
Exactly. So, and we need it today. And I advocate that everything, I know that the companies, the tech companies, they're not really, excited about doing that because, it's part of the business, but I'm not going to get into, maybe I'll get to that later, but I advocate that each and every applications will have this immediate, and it's possible. I know that some startups are working on this, and it's possible to authenticate everything that you can imagine, even the models themselves. When you build them, you can authenticate, the data that has been uploaded to the model, the training that has been done, the revision of the model, the algorithm. You can authenticate everything, the entire, what we call the flywheel of the process of the development. So it's something that I really feel and believe that this is where we're heading, because there's a need for that. Everyone understands that we need that to verify and trust the models. We need that in order to trust. The users need to also, the developers need to have trust in the data that has been entered into the model and the algorithm that hasn't been hacked or all kinds. We've heard about that as well. So also, when we're talking about models, sorry for that, is that basically if you're giving authority only to, let's say, several people who are developing the model, and with blockchain, if you're going to prevent that people that are criminals or hackers or etc. cannot enter the process and change anything within the model, which is very important because we have heard about things like that. So there's a lot of things I can talk about for hours. It's really important that now that we're entering into this era to have blockchain as a key component for all this trust issue.
Thank you. I want to go to John because, John, you're known for making blockchain simple. How do you explain blockchain to somebody who finds it intimidating or overly technical?
I'm going to give you the world's easiest explanation of blockchain. You ready? You ready, Andy?
Yep.
Okay, imagine a Google Sheet or like an Excel spreadsheet, a Google Sheet. But instead of being stored on like Google servers, the spreadsheet is stored on many, many computers all around the world. And imagine every time you make a change to that spreadsheet, it's automatically copied to all the copies everywhere, all over the world. And then every time we make a change to it, we store that data in a chunk called a block, and then we chain them together. Hence, blockchain. That's it. That's all you need to know. So there are many uses for this technology, for blockchain technology, but the big, hairy, audacious success story unquestionably is crypto, meaning financial assets using this technology, such as Bitcoin and others. And so that is now a $4 trillion asset class. And that is the opportunity for your audience, who I know are interested in financial planning and lifestyle planning. That's the opportunity to invest in for the future, is buying just a little bit of these crypto assets that are based on this blockchain technology as kind of a vote in the future of the global financial system.
Chris, at Bitcoin IRA, what were the biggest challenges in convincing people and their advisors to use blockchain for retirement investing?
Well, we don't. Well, you can't actually invest in the blockchain itself, right? You're doing it via proxy, via crypto, because as John just said very perfectly, the only thing he missed is the authentication that May was talking about is done by a consensus in users that are putting their nodes out there and they're authenticating transactions, no matter what chain they're on, and that could be the Bitcoin blockchain, the Ethereum blockchain, et cetera. And so for us, I mean, honestly, I always joke about the first time we did it, we put a press release out and said, hey, we've created the first Bitcoin retirement plan in 2016, June of 2016, about a decade ago now. And Your early adopters were probably folks like on this panel. I call them my engine nerds. They were hyper excited about being on the cutting edge of things. But what's happened since then is there's two factors that really drive people into alternative assets. There's fear and greed, right? Fear is that concept of worries about our fiat currency and the things that are happening, and greed is the waves that we see like in 21 and even 17, 18, and we'll probably see another wave of that here in the fourth quarter. Just quick thing I wanted to share. I love what Maeve said about authentication with AI. I do think that Bitcoin, cryptocurrency, and AI are in a perfect harmony for an amazing marriage ahead. Here at Bitcoin IRA, we actually call all of our clients on their birthday of their actual birthday, and we also call them on the anniversary of their account. Well, we're now up to about 250,000 users, so that's about 500,000 phone calls, which would have taken a floor of people in the past, and we use AI callers in order to have those conversations and wish them happy birthday and remind them of things coming up. And one of the things we just did in phase 2 is we started rewarding the AI agents with components of an actual token that was their compensation for what they were doing, and award and basically rewarding certain things. And we put them in competition with each other as well. And so we're just, I think, honestly scratching the surface of this marriage. And it's going to be so exciting over the next year and a half, because it will be accelerated. This is going to take a lot less time for adoption than we say for the internet was, or even for social media was, because AI is a driving force of it. So just really cool insights from both the other panelists so far. But yeah, it's always a challenge to get people to the table, but that's what we're excited about. That's our advocacy. That's what we're here for. Great use
of AI. Nick, you founded the first physical Bitcoin exchange. You came to this early. That was back in 2013. What did you see back then? And from a protocol standpoint, what excites you most about blockchain's potential today?
Well, yeah. So, I opened the Bitcoin Center in 2013. I was involved before, of course. I worked for Dr. Ron Paul, who ran for president a few times, and he spoke about competing currencies all the time. And when the time came, we all adopted. And I think the technology back then compared to today is more robust, of course, and many more people are adopting it. So let's say if you're going to do an analogy with the dot-coms, there was a time in the beginning of the dot-coms that, you had pets.com, you had this, you had that, and everyone was just excited with the word .com. So, but then everything collapsed, and I think we had that. And from my perspective, we had that in 2017. Now, I'm not sure what's going to happen now with the stock exchange, of course, and all the treasuries, digital asset treasuries. But I think that it's an incredible world. It caught me by surprise. I thought it was going to take a lot longer. I mean, that's why I opened the place next to the stock exchange. I tried to rent a booth in the stock exchange. In 2012, they laughed me out of there. And I said, "Oh, I'm going to open my own exchange next door." And, that's what I did as a publicity, not a publicity stunt, but I wanted to give visibility to the transparency of the blockchain to the financial world. And, we trained and all the traders who were losing their jobs due to high-speed trading and stuff like that. And we stood outside of the stock exchange and sold Bitcoin in the street, especially when they were all getting, after the closing bell. And then we'd bring them next door and give them free Bitcoin. It's a lot of them. And train them how to trade. So I think we did our part as activists.
That's real guerrilla marketing.
Nick,
Merav,
you are an OG. That's so impressive. 2013, you were doing this.
Well, yeah. I mean, we've been fighting the Federal Reserve for a long time. I think I started in 1991. So this is just the continuation of the battle.
I'm shocked we haven't crossed paths, Nick. Every time I'm in New York 4 times a year, I speak, I go and do interviews at the stock exchange, which it's kind of a cool experience, especially as a history buff like myself. You know, there's so much history there. As far as, you know, I was going up the back steps, and I'm like, I wonder if this is somewhere somebody was in 1929, and the smell of it and everything, and also my Bitcoin. That was my dark. Yeah, that's where my dark humor went too. But I also I was on the Coloradans for McCain campaign back when we were running against Ron Paul for that. So I'm amazed we have never crossed paths.
Yeah, you're lucky.
Yeah, you're lucky. You guys will have to connect next time you're in New York.
I think that things have changed for the better since your experience in 2013. You said, that you opened it just next to NASDAQ, and probably NASDAQ, back then, probably threw you away and said, hey, you scammer, move away from here. But today, they just applied for, to move everything to tokenization. They're going to tokenize all stocks. So they are moving everything to the blockchain, NASDAQ itself. So things have changed. Life has changed. It's like a complete evolution. It takes time. That always happens with technology. Nothing happens in a day. There's always, the first it starts with the hype, like the internet, and everyone wants to try something and think that everything has to be on the blockchain. And then because of this hype and because of all the fiascos and everything, so people just throw what, as I call, throw the baby with the bathwater. So we don't want to hear about that. Forget about that. Everything is false and crap and everything, which is not true. Technology, we know that it has substance. We know that it has value. We know what it can do. So the issue of tokenization, I think it's coming, and it's coming really, really, really hard. I believe, I've said that many, many times for many, many years. I believe that everything will be tokenized. Everything that you can imagine, even this video can be tokenized. You can monetize that as well. But apart from that, to your point, Nick, is that the big financial institutions are already in. I guess we're starting to get some clarity from the regulators. We have the Genius Act, for the stable coins, Clarity Act. By definition, clarity, it's on its way, and I think it's already been approved by the House. So we'll see it sitting now on the Senate with the Senate. So I think that's going to. I'm predicting that at least at the very least, it's going to be approved, by 2026 for the most part. But now for your point with what the financial institution and everything, we know that JP Morgan partnered with Coinbase. Coinbase is crypto exchange. I'm sure that people at least people here are familiar with who is Coinbase, and which is an exchange probably similar to what you have done in the past, Nick. But it's a bit more regulated. But so they partnered with them because now they're going to launch their own what they call JPMD, which is a commercial deposit. It's kind of like better than stablecoin because it's also yield, have some interest, yield interest and return on that. And it attached to a commercial deposit of the bank. And hear that they do have their own private blockchain, which we all know. They start with Quorum, then they call it Onyx, and now it's Connexus. But they're not launching it on the private blockchain. They want to be exposed to the entire public. So they're launching it on a public blockchain, which is layer 2 to Ethereum, which is the blockchain, Coinbase blockchain, which is called Base. So they're in. It's a different time.
It's a shame.
I know it's a shame because
they threw me out of the bank. They threw me out of the bank in 2014. 12 banks threw me out just because they heard Bitcoin or something. They threw me out of the banks. J.P. Morgan and Morgan Stanley yesterday asked me to invest with them. And I said, yo, you guys threw me out of the bank and now you want me to invest with you? I mean, it's pretty shameless what they're doing. They should stay away from us. I'm just joking. But, you know, they pushed, you know, Cuomo was governor at the time and he was getting a lot of donations from the banks, and he put Ben Lawsky in charge of the DFS, Department of Financial Services. And Ben Lawsky was a litigator and he was his chief of staff. He had nothing to do with banking. So he went after the crypto companies and he chased the whole industry out in 2015. He made the BIT license. You know, we applied, spent so much money just to keep the what was it called? Safe Harbor alive. Mm-hmm. And, you know, I mean, there's 30 licenses now, 10 years later. What kind of license is that? That's like that's an insider license. And at first there was only one, and then there was two. You know, it was very bad what they did to us. Every resident of New York should sign up for a class action lawsuit against the guy, because and if you weren't in New York, you could buy a bunch of crypto everywhere, and it was pretty easy. But if you were in New York, you had to hunt down one company. If that company blocked you, you couldn't really buy any crypto. So I think there's a class action lawsuit there. I'm going to go sniff out for a lawyer today. Come to think, now that I thought of this, I'd like the truth to be told that the banker kept us down, chased crypto overseas, and made every resident of New York not see the advertising of Bitcoin, not learn about Bitcoin, not be able to buy it. So, you know,
and it wasn't just New York. We fought tooth and nail to get into New York. Hawaii had problems too. And then there was the era of 2018 where I had to bring in multiple chief compliance officers and general counsel because we couldn't even advertise our business anywhere in America on Google, Facebook, Meta, LinkedIn. Today, LinkedIn still doesn't allow advertising for cryptocurrency companies. When the pendulum has shifted, right? They went very hard one direction of anti, and I think Nick nailed it. There was a lot of people with their pockets being lined by big banks, and that's what happened. This isn't the first time.
Cuomo happens to be trying to run for mayor.
Yeah, exactly. And this isn't the first time. If you look back
already, I don't know what he's doing.
If you look back at silver with JP Morgan too, they paid over like $3 billion in fines for manipulating the price of silver while they were buying it. One of the things that I really love, and I want to get this across to the audience for Andy, because I know this is the last of the shows about cryptocurrency, is I've always been a strong proponent of the fact that Bitcoin and cryptocurrency is the democratization of money. It is the people's currency. And I think that is, if we continue to hit home with that message, as we continue to expand our products and bring in more adoption. We're only at 1 or 3% of adoption right now. JD Vance said there's going to be 100 million American households that hold crypto by the end of the decade, and I think that's all our job is to stay that course and continue to carry that message forward. That one of the things I love about this, I've been in financial services for most of my career, and the house normally wins. And with cryptocurrency, the average Joe and the average Jane are actually making differences in their lives by being a part of this. I would almost want to say revolution of monetary policy. It's very exciting. Would you guys agree?
I definitely agree with Chris, about the democratization, because that's why I got into this, because of the it really has the power to democratize society, and also AI, in fact, and the combination of them together can do a lot of really great things if we really understand what the ability of these technologies. And as for I have a different statistics. I have a survey from Fidelity that's saying that 26% of retail investors hold digital assets, and about from globally about 56% of institutional investors hold digital assets. So the numbers are higher, and they're getting even higher. So
thank you for that. We have a lot to cover, so we're going to go to segment 2.
Cryptocurrency investing The digital asset ecosystem includes cryptocurrencies, stablecoins, central bank digital currencies, and non-fungible tokens, each serving distinct functions. Cryptocurrencies like Bitcoin and Ethereum operate on decentralized networks, providing an alternative store of value and enabling decentralized finance. Stablecoins, pegged to traditional assets, offer price stability, making them useful for transactions, remittances, and liquidity in DeFi markets. CBDCs are government-backed digital currencies designed to modernize payment systems and expand financial inclusion while raising questions about privacy and control. NFTs represent unique digital ownership, with applications in art, gaming, and intellectual property verification. These assets are reshaping finance by increasing accessibility, enabling new economic models, and challenging traditional financial structures. As adoption grows, regulatory frameworks and technological advancements will shape how digital assets integrate into mainstream financial systems.
John, your upcoming book talks about investing across different digital assets. How should new investors think about Bitcoin, Ethereum, stablecoins, and other assets as part of one portfolio? Ooh, I think you're muted. John, I think you're muted.
Let's simplify all this. So the crypto asset market today is about $4 trillion, and Bitcoin makes up about 60% of that, Ethereum about 15% of it. So those two, Bitcoin and Ethereum, are about 75% of the entire market. So for investors, for your listeners, owning a little bit of Bitcoin is the first step. Just a small amount, a small percentage of your portfolio, no more than 10% or even less. And you can buy Bitcoin, of course, at Coinbase or Robinhood. You can buy any number of ETFs. And then if you're feeling adventurous, maybe a little bit of Ethereum. And that's the basics. That's it. Then if you really get into it, you can start to add these other assets that you just referred to, Andy. So in my book, The Intelligent Crypto Investor, we show how to think of these other crypto assets like companies, and then use traditional valuation metrics like Warren Buffett style value investing metrics to these crypto companies to evaluate them to see which ones are worth your money long term. And then we have shown that over the last 7 years, since we've been tracking this, if you have a highly diversified portfolio, 60% stocks, 30% bonds, and again, no more than 10% quality crypto assets, you would have vastly outperformed other investors who are not involved in crypto at all by 55%. So again, 60% stocks, 30% bonds, like all stock index fund, all bond index fund, and then up to 10% Bitcoin, Ethereum, and maybe a few high quality crypto assets. And if you do that month after month, just kind of having a dollar cost averaging, a steady drip contribution every month into those three asset classes, you will vastly outperform. You will have a vastly outperformed traditional investors over the last 7 years.
Merav, do you agree? Start with Bitcoin. How do you explain the difference between cryptocurrencies, stablecoins, CBDCs, NFTs to students when you talk to them?
Well, I learned a lot about that, and to Nick points, I say, it all started with a really great vision and great gut in the way, and we kind of back to square one with the institutional investors, and that's the CBDC. So just to explain, stablecoin, we have the Genius Act, which is basically legitimize stablecoins. Stablecoins, it's basically the peg to any asset. It could be even gold, it could be diamond, could be whatever. But by definition, it has to be stable. So you have to find like a stable asset, and we think about stable coins, that are pegged to the currency, and the US dollar or the euro probably are more of a stable currencies than, let's say, the Venezuela or Argentina. So probably it's not really stable, but it has to be pegged to something. So so that's the peg. It's a token that is pegged, that 1-to-1, one token equals, $1, $1 or €1 or whatever. And now with with the regulation, it has to be, you have to have the in custody actual, either, you invested in treasuries or something similar to that. So you're actually holding the dollars in a safe place. So it's 1-to-1. And that's the idea. Now, CBDC, it's a different ball game. And this is why I'm saying that that's kind of like coming to ground zero, is because the whole idea with Bitcoin was, to kind of escape, government, and escape, no intermediaries, and no relations, to central banks. And what is CBDC? It is a digital currency issued by the central bank. So we're back to square one. And I know that the administration in the U.S. are kind of like they are kind of against it, and they're not kind of like for now, even though that the Fed had done experiments with that. The EU is thinking very, very seriously about launching their own CBDC, which is basically a euro or a dollar, just runs on the blockchain, and it's issued by the central bank. So it just, same story, but with different rails. So we're not really getting anything better than that. So that's, I wrote an article about that, Greek got us, back to square one, which, as you can understand, I'm not really a fan of it, but we might get there. Stablecoin is kind of like in between. And crypto is, everything is more decentralized.
If I can interject for a moment, I see Nick shaking his head.
Sure.
Nick,
so
what's your
talk about that? What he thinks about what I said. Sorry.
What's your take on CBDCs? Are they the future of money, or are they a threat to crypto's decentralized vision?
It's the future of a dystopian future, of course, because it's more dolphin coin than money, because you're going to have to do a flip for the government to be able to spend your own money. You're not going to be able, it's not going to be inheritable if they need to inflate, if they need the economy to be accelerated, they're going to say, hey, your money is going to disappear, or half your money, or 10% of your money is going to disappear in the next 3 months because I'm running for re-election and I got to show big numbers. I mean, if you put in your hands of where you're storing your work into something that the government made, you're out of your mind. I mean, you have I call it panopticoin. I made a video. It's on like the panopticon of a prison, where the prison guard looked around and you can look at inside all the cells. It's not just looking at you; it's controlling you and training you like a dog. So what's going to happen is, you're 5 miles away from your house. Your carbon footprint is a little too big. You better go back home, or you can't eat, because they're going to turn your money off. They can do whatever they want. It sounds crazy right now, what you're saying, but I always sound crazy in the beginning, and then it all comes to fruition. I think there's many things that they can do. They can they can do anything they want, and they're politicians. So the lobbyists are going to control what you can do with your money, because we don't really get a say in what the politicians do. It's the lobbyists. And, I've been in Washington, I don't even want to say, because you're going to find out how old I am, over 40 years. I'm 60 years old now. So I know it's just so crazy that people are even entertaining and even talking about CBDC. I want to burn down the Bastille when I hear CBDC, because, it's going to be easy. They're going to give away $500 or something for free. Everyone's going to load the wallet onto their phone. And then they're going to be a puppet. They're going to be trained. It's more than just surveillance. It's gonna move the way people think, and their endorphin response in their brain is going to be. It's going to be a Pavlovian future, where whatever they want, they can make us think and believe and feel with our own stored work. Because that's what money is, right? You're storing your work across time so you can use it later. But, if you got the government or some politicians, ability to receive more lobby money sitting there at the throttle, you're going to be doing flips like a dolphin to get a little fish.
Chris, I want to get your thoughts, especially through this lens of Bitcoin IRA. You have Bitcoin in the name, but then over time you've added other digital currencies. Are there criteria that you have to use to decide which assets are safe enough for retirement investing?
Yeah, great question. And first, I'll just close out Nick's statement. It's lipstick on a pig. That's all a CBDC is. And we should run as the opposite direction as hard as we can. It does make sense in places like Europe, which is used to kind of pseudo socialism, high taxes, a lot more government intervention in the daily lives. But as a red-blooded American since 1985. I'll give you my actual age. I just turned 40 this year. My biggest thing I remember hearing when I was a kid was Ronald Reagan said, "I'm the government and I'm here to help," is the scariest thing you can hear. I just avoid that altogether. Now, how do we choose crypto, right? So we're OG. We're not as OG as Nick. 2013, we're 2015. And Bitcoin was the only game in town at that moment in time. So Bitcoin IRA was a common, obvious name for us. But since then, we added, obviously, first year, 17, we added Ethereum, XRP, Litecoin. We supported the Bitcoin Cash fork, the contentious Bitcoin Cash fork back in that year in November 17. And now we're up to 80 plus different cryptocurrencies available. Our biggest parameters from our compliance officers is that it has to sit inside of our, what we call the Pentagon of custody. So it has to sit in our cold storage and cold storage settlements. We partner exclusively with BitGo, which is arguably the Brinks of the space, to make sure that we keep things behind SOC 2, Type 2, and up to $250 million of insurance per wallet. So it has to live in that world. Beyond that, we also watch for, we don't have to watch it as much now, but the last 4 years, if the SEC, CFTC, or any other three-letter agency had an issue with a coin, we had to be cautious there. And then we also look at just the metrics on a coin market cap. What's the 24-hour trading volume? What kinds of things are happening? We listen to our clients is how we got here. So we have over 200,000 users now, 14 billion in assets under custody. And we listen to them first. So they're the ones that drive us there. But they also come back with some things that I'm just like, I can't. I'm trying to get the penguins, the pudgy penguins rolling right now. And I'm getting some pushback from the compliance department. But over time, as those things grow, there is use cases for meme coins. There's use cases for layer twos. There's use cases. One of my favorite coins this year, I think is really gonna embed its way into the overall landscape here, is Link. I think Link has got a great pedigree ahead of it. So it's also about listening to the market shifts, market trends. And then just wanted to add a quick thing about stable coins. I was in a lot of rooms over the month of July, a lot of boardrooms in big banks, regional banks, and that's their hyper focus right now, is how can I compete and dominate the stable coin space, whether it's all the big banks are going to issue their own stable coin, and then how are they interchangeable? These are going to be big conversation pieces. And recently, what I thought was interesting, I wanted to get the feedback from the panel here, was Putin, I think, put out a notice earlier this week to the US but basically you just took all your debt and you tokenized it for stable coins. And I haven't made a final decision on my feelings about that. So I was curious to see what the panel had to say.
You mean about Putin's remark that he's going to take all the debt and put on blockchain?
Yeah. More or less, or basically it's kind of like a workaround. It's a loophole for the government to manage the debt that we've created for ourselves. So just curious about your thoughts on that.
Bitcoin's going to save the dollar, of course.
Yes, absolutely.
For as long as it could. And then people are going to actually understand what the dollar is, because the only reason why the dollar exists. And, I'm all over Africa too. And I call it voodoo money, where you have lithograms of dead people that you're passing around, and you think it has value because everyone else thinks it has value because some witch doctor signs it, and you sit there and you store your life's work in there, and they just print up more lithograms, diluting the work that you've invested in to get these lithograms of dead people. So yes, Bitcoin is saving the dollar for as long as Bitcoin can save the dollar, because once people understand what the dollar is and what fiat currency is, how could you ever store your work in something someone can print as much as they want and give it to anyone they want? It's a little silly. And one more thing is that not only do they print this out of thin air, But to give it value, they want you to run around all year and collect a bunch of their own voodoo paper and give it back to them, or else they'll put it in a cage. So that's like, instead of proof of remittance or custody or redeemability, that's like proof of cage, I call it, because if they didn't have that side, maybe people wouldn't have collected it in the early days, and the gold would still been around. But FDR made the gold illegal, and he pulled that flim flam on the people because people were uneducated. But now we have the internet and these great shows like this one we're on right now, and people can store their money in Bitcoin. But you got to have the private key. If you don't have the private key,
and a cold wallet. That's what I say. Private key and a cold wallet. And to Nick's points, I'm engaging especially with people who are laymen that not this group who understand what crypto is and blockchain, and they always say to me, "Oh, crypto is an illusion." And I'm saying to them, like, what? Your money is not an illusion. It's all fake. Whatever the government is printing is fake money. It's also an illusion. It doesn't exist. If you have $1 million and want to go to the bank and you say, I want to withdraw all of my $1 million, I will tell you, hey, not today. Come, in a week, and maybe we'll have that $1 million. So that's something that people don't really understand how the monetary system really works. And I do believe, there's a thesis by Balaji, and people who know more about this crypto space, probably they know who Balaji is, and he believes that eventually Bitcoin will reign supreme. And he has a theory that everything is gonna, with stablecoins, everything is gonna come on chain, and there's gonna be some competition, with the stablecoins. Eventually, maybe one or two, like the US dollars and the euro, maybe will succeed, and eventually people will understand that why am I locked, with a coin that is attached to a nationality when this money, on the blockchain can be anywhere. So, and then they will understand better, the concept of what is Bitcoin and all the benefits of that, and then that will be a move. So
I have one question for the panel that came in from a viewer. Why if there are tokenized money markets, would that destroy stablecoin? And why would anyone want a stablecoin with no yield?
Mm-hmm.
Anybody have an answer for that?
A couple of things that I've seen recently. There's this contentious battle between the big banks made sure that within the Stable Act, or the one of the bills that went out in Crypto Week, was that you can't offer yield on stable coins. And
right.
there's good justification for that, because we saw what went wrong in 22 and 23 with beyond just yield, and then it became rehypothecation, and greed drove a lot of things in that entire space. But there are, and I was just wrote a piece for NASDAQ about this, there are a lot of groups that are offering rewards for being a part of it. So it's not yield, but it's still reward for being inside of it. And
right.
and to the audience's question, this is the battlefield for the next 6 months between. At the same time, let's not forget, this isn't a vacuum we're living in, but US dollar yields are likely going to drop next week, given CPI and labor statistics that are happening.
I think it's a great question, and to the audience, as the viewer points, is that yes, probably if everything can be tokenized, and it's probably going to happen, and like what JP Morgan is just doing, other banks may follow, and if someone is offering me something that has a better yield, then why should I stick to something that the inflation is going to ruin it? But that might open the door to think about the real DeFi products that we have. That I don't know. Maybe people say it's more risky, and the yield farm and all of that. It depends what you invest in, and hopefully little with some more education. I hope that now we'll have better education for the public about what is blockchain and the entire digital asset and what it means. Then maybe people will start, investing in DeFi, not those tokenized, bank, whatever. and where they really can have a real value that is not attached to the bank and what the bank wants to do, but it's really decentralized. So, I'm more than happy to write more about that.
Okay, let's move on to segment 3.
Cryptocurrency investing carries significant risks and rewards. High volatility means prices can swing dramatically, creating opportunities for gains, but also exposing investors to substantial losses. Security risks, including hacks and scams like rug pulls, highlight the need for secure wallets, two-factor authentication, and thorough research before investing. Regulatory uncertainty can impact market access and taxation, making it essential to stay informed on policy developments. Cryptocurrencies offer diversification benefits due to their low correlation with traditional assets, but prudent portfolio allocation is key. Strategies such as dollar cost averaging, portfolio rebalancing, and limiting crypto exposure to a small percentage of total investments can help manage risk. Institutional adoption is growing, bringing more stability, but retail investors must approach the market cautiously. A disciplined, security-focused approach minimizes risks while allowing participation in the evolving digital asset space.
John, you've shared your story of going all in on crypto, nearly losing it all, and building it back. What's the biggest lesson you learned from that experience?
Yeah, I'll recap my story real quick. So I bought Bitcoin way back in the day. The price was $125 per Bitcoin. My wife and I bought a bunch of it. It was really hard to buy back in the day. We got it. We held on to it. I kind of forgot that I had it. And every once in a while, I check in on the price. And then I remember about like 2016, 2017, price of Bitcoin hit $10,000. I turned to my wife and I said, holy cow, this is the greatest investment we've ever made. Let's go all in. So we have this marketing company and decided we were going to only go after crypto and blockchain clients. And at the time, this seemed like a great idea. And it was. So we pivoted the entire business and it really worked well for 3 months. And then the price of Bitcoin plummeted. And with it, the entire crypto ecosystem just dried up overnight. And all these new clients that we had attracted just went away. And we almost lost the business. It was really, really dark days. Elon Musk once said, being an entrepreneur at its worst is like chewing glass and staring into the abyss. And that's an understatement. Terrible, terrible. And one day I remember I was having coffee with this fellow entrepreneur who was also trying to make a crypto business work. And he was just out there just like grinding it out like us. And he said, you know, when we make it through these tough times, we come out with a tremendous gift. I said, what is that? And he said, wisdom. And so the process of making it through that, building back our business, building back our own investment portfolio, taught me something really valuable. And that's what I'm passionate about sharing. And it's one word, diversification. Diversify, diversify, diversify. I became like radicalized on diversification. So that's why today, the best approach for most investors like your listeners, Andy, is again, highly diversified portfolio, something like 60% all stock index fund, like the Vanguard all stock index fund, like 30% all bond index fund, and then no more than 10% high quality crypto assets. If you are still skeptical about crypto, it can be less, can be 5% crypto. You want to start with Bitcoin for most people, maybe add Ethereum. And then if you really get into it, add other high quality crypto assets. You want to contribute monthly, do dollar cost averaging. So you're getting the average cost over time and you want to hold for the long term. And that's it. That's the whole plan in a nutshell.
Valuable wisdom and well earned. Well earned. Nick, how do you feel about institutional players entering a movement that started as a rebellion?
Yeah, it's pretty funny. The rebellion was against institutions, and they were against us. And, you know, first they, I don't know what the order is, but first they laugh at you or whatever, and they hurt you. I don't know. I forgot the saying. And then they join you. So apparently, we were right. I was not treated well by the banks. I mean, when I first opened in 2013, I mean, I was in crypto before that, but to open that exchange, we had 6,000 square feet on the ground floor of the Satai building, right next door to the New York Stock Exchange, and 40-foot ceilings, and it was big cost. And I said to myself, "What the heck am I doing over here?" I was so angry that they wouldn't let me rent a booth, that I had to open my own exchange. And what happened was the institutions would come in and sniff around and try to grab the coders, and many of them did. But I knew, because I've started many businesses before that didn't exist. I had Get a Room, No More Hotels, like the first Airbnb, one of the first, very early 1995, and no one knew what it was. And it took a long time, to get it. I couldn't even get a merchant bank account because they'd ask me, "Oh, someone's going to sleep in someone else's bed. Where are the other people going to sleep? In the same bed?" And it was so new to people that it was difficult to adopt quickly. And then I also built Livery Cab about 4 years before Uber, and but it was, most people had SMS, So, I burnt all my money going that way. I never really took any investors' money. I just make it and sell it. I had Apartments Express, which was access to listings that people would pay for in New York to not pay the broker. I had a lot of new things that they made law. As a matter of fact, they made a law, Department of Information Vendors license. They made the Bitcoin license, the Bit license. And, these institutions are afraid to, they have their lobbyists, right? So they're afraid that they're going to lose their market share. And so they fight you, and they try to discredit you. When we first opened, I thought we were going to get arrested right away. That was the first thing I thought. So my heart was pounding over there. And but my father taught me, Thirio den yinesan, thirio den tros. A beast you'll never become until you eat beasts. So, my father passed away, and I had to do it. I had to stand there, and I stood there with a bunch of my guys from the Ron Paul campaign, and we did it as an act of activism. It wasn't, I don't know, I didn't know anything about Wall Street. I didn't know anything. I mean, I walked in there trying to rent a booth. I made it all the way to the chairperson, but, they threw me out of there. They said, "What was that, video game money?" I said, "No, the blockchain. I'm drawing the blockchain on there." It's a
Not easy.
long road, guys. It was a long road. And now, you got all these creeps robbing everyone. I don't know. I'm in here for the freedom. I think humanity, there's a small window of opportunity that we can embrace our own worth as humans, where other people can't manipulate where we store our work and our value. And our vote is where we move our stored work. And, in the past, they've bastardized that system to the point where you're trading something that's not scarce. It's like you're trading sand on the beach, but you can't see that you're standing on the beach. And, some people do, and some people make more sand and you can't, and you got to go collect it, give it back to them, and they put you in a cage. The whole thing is a Ponzi scheme, The dollar, the Federal Reserve System is a Ponzi scheme. I helped put together the End the Fed movement. I pushed all the candidates that were against the Federal Reserve and marched on the Federal Reserve with Ron Paul. I got the video online back in 2008, and put bills forth in Congress, which we got the representatives to vote for it, but then we went to the Senate, and then Bernie screwed us. He said he was going to vote for it, and him and another guy, and they voted against it. And then Bernie put out his own audit the Fed bill, and then it had no teeth, and they passed that one, but there was no audit. So I think everyone's living in an illusion. There's no scarcity. And how are you going to store? Your work is scarce. How many hours of work can you put out in your life? These guys can put out as much redeemable of your work as they want. What are they, magicians? They're witch doctors. The whole thing's sick and perverted. And if anyone believes otherwise, they have, they're just followers. They can't use their brain. See me, I'm lucky. I can use my brain. And I saw through it pretty early. As a matter of fact, I registered cryptos.com in 2004, 5 years before Bitcoin. I even tried Mindcash in 2004, and the government came after us a little. They didn't come after us, but we got a bunch of notices. We shut that thing down. Opened the escrow payment in 99 because of the not being able to facilitate paying landlords for the short-term rentals of getaroom.com and nomorehotels.com, tiemposcordos.com. We had all different white labels. So to send money anywhere in the world was ridiculous. You couldn't even do it, It was very difficult. So I think there's a new age. I think we have a responsibility, to everyone before who's their whole lives, they worked and were driven into the dirt because these guys printed more of their work than they can actually put out. So these guys, they came and buy a tuna fish sandwich now. They could have bought a car with the same money. So that's theft. And they're stealing from the old people, and they're stealing from the poor people, and they're stealing from all the people. And I think, there's a call to arms. I know there's a bunch of investors there. And but this is what's happening. The reality is not only can you make a lot of money, not only can you make a lot of worth, but you can save the world and your kids' world and your grandkids' world and your great grandkids. As far as humanity is going to go this time, this into the future, I'm not sure how long that's going to be, but we actually have this little tiny small window of opportunity, and if these sleaze bags get a hold of it and turn it into what they can manipulate, it's the wrong move for humanity and for your worth, because the more they manipulate it, the less you'll be able to make off of it. So,
Chris, I want to take a step back. Volatility is a big challenge for investors when it comes to crypto. It's great when crypto is going up, but it can kill you when crypto is going down. How do you help investors to help balance the volatility of crypto with the need for long-term security?
Yeah, absolutely. I mean, I've always lived by the policy, when in doubt, zoom out. And I have seen, so I've been this might be my third or fourth cycle in crypto, not as OG as Nick, like I said, but I didn't have any gray hairs when I started this game. I also had a 4-year-old daughter that was born around the same time. So I think half the hair problem is her fault. The other half is crypto's fault and everything that's happened. But volatility is one of those, that's one of the reasons why I love what we did with the IRA, is that it puts you in a place where you're not only thinking long-term, you're saving today to change your life tomorrow and hand it down to the next generation. My daughter, who's 12, has a Roth IRA from earned income that's in Bitcoin and Ethereum for her college savings plan moving forward. I think the big thing with volatility is you have to zoom out. And, Nick just went down something that just spoke to my heart, by the way, is like that tangent about everything that's been taken from us. There was one thing in the 1970s, and I'd done a lot of pieces on the Nixon shock in 1971, and how that really, if you look at every chart that is what's gone wrong in our economy, especially domestically in the U.S., but also globally, that moment in time that really wasn't a big moment. In fact, if you go to the Nixon Museum in California, I went there and I asked the lady at the front, I said, "Where's the Nixon shock part?" And she goes, "What are you talking about, son?" And I was like, when we took us off the gold standard, one of the biggest moments in our economic history, there's nothing in there. There's everything else you could imagine in that museum, and there's nothing about this. That same year, I think it's important to remember, they took off the gold standard, but they gave us something else. They gave us retirement accounts. They gave us IRAs, the Roth and the traditional. And these are tools where if you take the time to save long-term and put it at an arm's length distance from you, the government benefits you either by a tax savings today, tax savings deferred in the midst, so avoiding capital gains taxes if you're swapping between tokens, et cetera. And then when you get to the ripe age of retirement, to maximize your tax advantages. Taxes will always go up. They've always gone up, just like the dollar's always gone down since 1913 and the advent of the Treasury and the Fed. However, there are tools that you can use to your advantage, and I think that's one of the reasons why I'm such a fan of the retirement setting at the crossroads I sit at of crypto and retirement is if you think your 5,000 is going to go to 5 million, what better place to have it than inside of a retirement vehicle that the government gives us? And as Nick just mentioned, they don't give us much. They usually take a lot, right?
Merav, you've been chomping at the bit to chime in. You're a data scientist. Are there metrics or indicators that investors should watch to better understand crypto risk?
Well, I've done a lot of research on and work on volatility. So yes, so you can use all these models on volatility and kind of predict to a certain degree what the volatility is and where it's going. So that one aspect of it. The other aspect is to look at the fundamentals. I don't know they know that there are traders who only look at the technicals, but this is only short terms. But if you really believe in the value like Bitcoin and Ethereum, Solana, Hedera, the Chainlink, the others, really have like real world use case, so you can really do the fundamentals and look at these key parameters of what they have, what they're really doing, how they are positioning themselves in this environment and everything that is happening today and to the future. And this is how I would suggest that people will look at that. I would stay away from most of the meme coins. If you don't have the stomach to speculate, so don't do it. It doesn't have much value, so there's not much to do there unless you're going to look at the technicals, momentum, and all of that. If you want to build this kind of an algorithm, go for it. But understand that you have to have the stomach for it. So that's I'm not giving any investment advice by any means, but if you are investing in any market, even in stock market, you have to understand it's not always going to go just up. Nothing goes up all the time. That never happens. But if I'm allowed to say something to Nick point, is that first of all, I'm happy. That I got to know you and that you are a true veteran that have been around since the beginning. I joined a little bit after you, but I stuck around even though I got a lot of criticism. Why I'm there, why I believe in that, why I'm advocating for it. Because like what you said, I do believe in true value and the of the technology itself, that it has the ability to really democratize society, really free us from all the attachment to governments and banks, etc., and be able, to be individuals who control our creativity, our work, our whatever we do, and what we call connect with communities all over the world, because we're basically nowadays with digital world, it doesn't matter where you live. You can connect with anyone anywhere and transact with anyone anywhere. And I do believe, I might be too much of an optimist, but I have to, is that eventually we're going to come back to where the entire kind of revolution of Bitcoin started, and people will understand that we are just a community, a global community that can take care of each other. So I do believe in that.
Chris giving the thumbs up and making a clear difference. A good point, Merav, that there is a very clear difference between investing and speculation, and that can apply to stocks, it can apply to bonds, it can apply to digital currencies. Let's move on and go to segment 4.
Before we jump,
cryptocurrencies' rapid growth raises ethical concerns, from environmental impact to consumer protections. Bitcoin's proof-of-work mining consumes large amounts of energy, contributing to carbon emissions. Alternatives like proof-of-stake significantly reduce energy use, with Ethereum's transition cutting its consumption by over 99%. Decentralized finance offers financial inclusion, but also lacks oversight, leading to scams and money laundering risks. The legal landscape for crypto remains inconsistent, with protections varying widely across jurisdictions, leaving investors vulnerable. Responsible investing involves researching projects, prioritizing energy-efficient cryptocurrencies, and supporting transparent, well-regulated platforms. Regulatory clarity could improve security while allowing innovation to thrive. As crypto adoption grows, balancing financial opportunity with sustainability and ethical considerations is critical for long-term viability. Investors must assess risks beyond returns, ensuring their participation aligns with both financial goals and responsible practices.
Chris, I'm sorry, we cut you off.
It's okay. No, it was so funny. We've gone over the hour, and I've got some things that I have to take care of today. But I just wanted to thank all the other panelists, as well as the audience for here, and keep doing like Nick said. This is freedom, and freedom takes education. And there's a huge financial literacy gap and a retirement gap in this country, which is driving the income gap, in my opinion. And by being on this show and listening to folks, continue to do your homework, do your research. And I hope to connect separately with all the other panels. I just want to say thank you for having me today. I wish I could stay for the next few segments. You guys are brilliant people, and I definitely was the junior, and I learned a lot, and I'm truly inspired. So thank you so much, Andy, for having me today.
Chris, thank you. Before you go, as crypto becomes more mainstream, how do you anticipate regulation shifting to safeguard the average investor?
That's a really good question. I think part of what they tried to lay the foundation for in the crypto week in July is laying some of those foundations. There's this challenge between giving full. Nick said something about have to have the private key, and I totally agree with that as well. But I don't necessarily know if my great grandmother could handle a private key, or if I died today on a flight to Los Angeles, if my wife and my kid, as much as I am in my home studio now, and they see me speak about Bitcoin, could they handle my ledger device? So there's a give and take between complete independence and making it fit inside of a system that makes sense to most folks. And we still have to evolve through that. And what I'm really happy about is that this giant black marker of regulation from the last administration in the last 4 years before what we've seen this year is starting to go away. And we're getting a much better, I think, a more fine print Sharpie to really to figure these things out. This isn't a one size fits all strategy as far as, and it's not just with crypto and it's not just blockchain. Maeve spoke about DeFi and CeFi and all these other elements that are coming to play. We have to be very strategic about it. But you also have to protect the consumer at the end of the day, because as Nick said, there are sleaze bags that walk into any unregulated space. That's where rug pulls happen. That's where Yeezy puts out a coin and pumps and dumps. That's where FTX happens and Alameda and all these others. So it's a balance. It really is an important balance that we have to get through. And it's going to take collaboration and it's going to take a democratization of it. We all should have a voice. This is a consensus-driven protocol, and we should stay that course as we continue to evolve. I hope that helps.
Thank you for the rational viewpoint.
Wasn't FTX regulated?
No, they were regulated. That was the whole point.
License out of the Emirates. They had a license.
Oh, was it Bahamas or Emirates or exactly? No, I agree with you, Nick. You can put
Bahamas, right?
Yeah, in the Bahamas. Yeah, you can put lipstick on a pig and make it look good in front of regulators as well, right? And regulators can set certain rules. This is going to come also with an evolution of more younger, crypto-driven, innovative entrepreneurs like myself. My Twitter handle, if anybody wants to follow, is @Senator Kline. I was joking about it at the beginning of the call with the other guests. Is I'm not a senator. I made that Twitter handle in 2009 because I was convinced that I was going to be a senator or retire by the time I was 40. Well, I just turned 40 this year, and I got to tell you, looking at the cesspool of Washington D.C. and politics in general, we've got to clean some things up before you can. People like myself and Nick, Maeve, others will jump in to help be a part of that change we wish to see in the world. But it's a step at a time, right? We got to take one step at a time.
I believe that maybe the Clarity Act, which is going to bring more clarity on how you can really invest in the DeFi and the other, instruments, not just, stable coins. Hopefully, that will be, I think, like the bridge to really understand what the the entire blockchain and has to offer. And that will be the first step. Not the end of it. I don't think that will be the end goal. I do hope that the end goal will be that people will really, everything is going to move on chain, and people will really understand the real value, like what was Nick, why he got into it.
Yeah. Merav, you talk about responsible innovation. How can blockchain projects balance rapid growth with ethics, sustainability, and inclusion?
I mean, that's, the false narrative and the misconception of people saying, oh, blockchain is only scammers and only illicit transactions and all of these things, which is not true. I mean, just to put things in perspective, I mean, there are stats on that. I think Chainlink, not Chainalysis, they have a report, and they're saying, out of all the transactions that are on chain, only like 0.3% are illicit transaction, and it's coming down year by year. And if you now, to put things in perspective, still fiat is a preferred method for criminals, because if there is a report, I think it's from the International Coalition Against illicit transactions, things like that, and they're saying that about 3 to 5 trillion with a T, not billion, with a T, is fiat illicit transaction. Just to put things in perspective. And so people will understand, which is 5% of the global GDP. So that's the first thing that people have to understand. And in fact, I'm saying to people that I would dream that all criminals will do all transactions on the on-chain. Why? Because you can track them. And this is how with the help of companies like Chainalysis, I've done that too. I know I helped some states departments. I'm not going to go into that. Catch these criminals, because everything, I mean, with some algorithm of AI, I mean, I'm not saying that it's easy to do all this, but everything is recorded. It's not erased. It can be tracked. So yes, criminals, please go and do everything on chain. Please do, because this is how we're gonna track you. So, but they know that fiat, is a preferred method. So that's one thing. And going back, to what I said about the AI, I mean, I think that blockchain can be the way, to authenticate everything. Nothing is erased. Everything is trackable, immutable. And this is how I said, you can track all these criminals. You find them eventually, easier than to track fiat. So there's, as I said, a lot of false narrative about going around, what blockchain is all about. And going back to the beginning when I said that AI fakes and blockchain authenticates, so that's the main thing that people have to, if there is one message people would take from this, is that AI is the fake, and blockchain can bring the trust, and not the other way around. And this is what people should remember, why they should, go back to that. And of course, there are all kinds of other benefits, which Nick, already spoke about that, and why you should invest that. And one last thing about, the energy issue, when you say, that, blockchain consumes a lot of energy and it has to do with the mining. I'm not going to go into that. And yeah, you talked about staking and everything. But again, putting things in perspective, AI, if there's something that kind of like bleed energy is AI. All these computations with all these large models and everything, they are much, much, much more energy consuming, much more computation power, and not just energy, water. Because in order to cool these data centers, you need clean water, drinking water. So the communities, there are stories about communities, especially in developed communities, when they don't understand, what is the concept of data centers, and they sign up, okay, put it here, and then they realize that they are deprived of, electricity and drinking water and everything like that, and it's like something that really have to be discussed. So if anything is going to ruin us, is the AI, not the blockchain.
Nick, what role do patents and intellectual property play in open source crypto innovation? Is that fair play or is that gatekeeping?
Well, I invented the multi-branch blockchain back in 2012, before there were many I think it was 2 blockchains, whatever, and interchain operability and all the stuff. And my fear was that the banks would get the patents and block us out. So there are many reasons to get a patent. Sometimes you have partners that see things in a different way. But I don't know what I'm allowed to say. But do I like patents? No, I don't like patents. But the reality is that if you don't get it, someone else is going to get it. So if someone else gets it, jam up the whole industry, that's not good either, right?
Yeah, so it's a necessary evil.
But Nick, just a question: do you believe in decentralized AI, decentralized open source, and
Only,
yeah, and everything gonna come on chain, and therefore you don't need to?
Yeah, it's just it's a better database. I mean, in the beginning of the internet, we wanted secure encrypted internet. The Department of Defense didn't. As a matter of fact, they visited my office too because we were sending encrypted emails. I don't know how, but they didn't want that. At one point, it was considered a weapon or something like that, international weapon trading. I don't know, something. So, the internet could have been built this way years ago, but it wasn't. So we're just getting back to what we're supposed to have. We're supposed to have privacy, provability, and everything else that comes along with our technologies.
Thank you for sharing your thoughts. Stick with us, everybody. We're going to go to the last segment. Our remaining guests are going to share where are we going from here? What's the future? Let's go to segment 5.
Blockchain and digital assets are shaping the future of finance, governance, and online interactions. Web3 integrates blockchain to decentralize applications, enhance digital identity, and give users more control over data. Innovations like Layer 2 scaling and interoperability solutions improve efficiency, while security advancements strengthen trust. Institutions are adopting blockchain for asset custody and supply chain management, while governments explore central bank digital currencies and regulatory frameworks. Regulatory clarity on stablecoins, DeFi, and taxation is expected to impact adoption and market stability. Blockchain's role in financial systems is expanding, offering faster cross-border payments, increased financial inclusion, and transparent markets. Decentralized finance continues to evolve, challenging traditional banking models. As blockchain adoption grows, its ability to reshape industries will depend on technological progress, regulatory adaptation, and user-driven demand for decentralized solutions.
Merav, you earlier talked about JP Morgan. You've discussed with me organizations like BlackRock as well as JP Morgan really deepening blockchain adoption. Can you talk about how these innovators, those who are investing early into this will benefit, and what the competitive landscape might look like for smaller innovators in the future?
Let's put it this way. I'm not talking about the fintech space, with the startups that have been in the crypto space, and they're definitely positions better than anyone else because it's always, easier to build something innovative from the ground up and not, try to change, a traditional system that has been around, for decades. So they definitely position. They know what they're doing, whether it's the Chainlink or all the other blockchains that we have now with Dara and Solana and all of those. and there are other applications. So this is aside. Now, if we're talking about traditional finance, then they will have a harder way, a harder time, to change into the new economy or the new world if they don't have, the infrastructure. They need the infrastructure, need the talent, they need to to build everything, to understand the technology, understand how it works. So this is not something that happens in a day. So there are companies where, like JP Morgan, which we just mentioned, and I know that Nick has a lot to say about them, and not in a good way, and that's a different story. But they did read the map. I mean, they were the first, from the space of the traditional finance. I think they were the first to get into that. They built, their own private blockchain back in 2015. They didn't get into crypto because what Jamie Dimon always said, that what he thinks about it, and I don't want to use his language.
He didn't tell us he got into crypto.
Yeah. But he did believe in blockchain technology. He did invest in that, and we see the results now because they were the first mover. Now that just as we stablecoins, and other things, are getting regulated and legitimized, then he's taken the first step. They're taking the first steps. So they're going to, because they have positioned themselves for a long time, even before things became more regulated, there's more clarity in the space. They're going to benefit from it because they've been experimenting with blockchain technology, with tokenization, and all of that for many years. Same with BlackRock, and there's also some European banks that have done that, and also from Latin America. So they probably will be positioned to benefit the most at the beginning. The other will have to catch up. I don't know if this advantage will be something that's for the long run, but time will tell. But I do believe, those who have invested a lot of time and energy on that probably will benefit the most from that. So it's all about, positioning yourself and understanding where eventually this is be headed. But that's, from the traditional finance perspective. I mean, they're definitely not going to stay behind. They're trying to take a groups of it. And Nick was just mentioning that now coming back to him, like, hey, join us. Yeah, we heard you before, but now we want to be your friend. So they do understand, that they have to do that right now if they want to.
They don't want to be our friends, that's for sure. They do not want to be our friends. The reality is BlackRock. So one of my co-founders and friend, and he was a chief data scientist at Facebook for a while. He worked for me as a chief data scientist for Dr. Ron Paul Hamdan Azar. He worked at BlackRock, and he was going to be one of the ones that headed up the Bitcoin strategy. And then they found out, I think, well, he was heralded by the COO on stage as being a new rock star, out of 30, 40,000, I don't know how many employees they have. He was heralded on stage by the COO. And then a few weeks later, right before the Bitcoin meeting, he curiously got ejected from the building. And I think they found out that he was a purist in Bitcoin, and he wouldn't go along probably with what they want to do or what they're doing, because the reality, what they're doing is they're compromising the decentralization of Bitcoin, and you don't need a 51% attack on mining. You can just, especially with the fine print, when you buy the ETF, they can move that value into any fork they want. So they can say, hey, they can have some fake quantum collisions and say, oh, SHA-256 is at risk. We're going to move to this proof of stake quantum resistant Bitcoin fork, which is pretty easy to make. I can make one right now before the end of the show. And we're going to move the value there. And don't worry, you're going to also have the Bitcoin and the other, because that's what happens in forking. You're going to have both. But what's going to happen is the value of the Bitcoin is going to go down. They're going to pump up the value of their fake coin, and it's going to be proof of stake, and they're going to give it to the member banks of the Federal Reserve, maybe the nodes. So this thing, I believe they have the ability to do that, and they can move the value around and kill Bitcoin. And I think everyone should take their money out of the ETF and put it somewhere where it's actually coin that's being stored, but in a decentralized fashion. If it's smaller outfits, I mean, the bigger the outfit that has the larger control of a market share, the more effect they can have on this. I mean, Ethereum forked, and look at Ethereum Classic. It's dead, and then many things worked. And I think because people don't have this history of what has occurred, the thing history is going to repeat itself. And they've even made it clear that they think 21 million isn't enough. But the way we got it under the wire is that there's 100 million satoshis per Bitcoin, so the 21 million didn't scare them. It was more like a Trojan horse, and that's why we're alive today. Because if we told them how many satoshis there were, we would have been in trouble really early. So they thought we were, just playing with a toy, because there's only 21 million, but there's 100 million pieces to each one of them. So I think one of the executives from BlackRock said that it's not enough, and we're going to need to make more Bitcoin and change the amount of the supply, and that's really threatening, I think, to this whole thing. And that's one of my predictions, that they're going to attempt to do that, and then they're going to OFAC any wallet that's not whitelisted through them. So you're going to have to whitelist your wallet with, institutional company or body, whatever. And, you have to dox up, give all your documents and stuff. It's going to follow your new Bitcoin on the fork. And if you don't, you're going to be OFAC. So the Office of Financial Asset Control is going to go after you and give you 20 years for having a Bitcoin wallet. And the mining companies, now that they're all going public, they're going to have to abide by the new rules, of course. And, the small miners might get some of the trades, some of the transactions out of the mempool and post them in a block here and there. But the institutional miners, which are growing every day because they're buying up the smaller miners, because they have, Main Street, Wall Street, and Main Street money to be able to do that in the ebb and flow of the price, and the ups and downs of the price. They're going to be able to buy more percentages of the mining, and this is a future that's probably going to happen unless we fight and not allow it to happen. So that's one of my predictions. You don't want to hear the rest. That was the soft one.
Thank you for the soft predictions. Things to definitely watch out for. I think we will leave it there. It was quite a conversation. Gave us a lot to think about. We touched upon many different aspects of crypto and blockchain, even philosophically thinking about what is money to us today and what is the future of money. One of my favorite takeaways from the panel today is that you don't have to be all in on crypto to start learning and benefiting from blockchain technology. As our guests have reminded us and taught us, blockchain's real potential goes far beyond speculation. It's about trust, transparency, and innovation across industries. So I want to give you one thing to do this week. Take 30 minutes to learn about one real world use case of blockchain beyond cryptocurrency, whether it's supply chain transparency, digital identity, or decentralized finance. Pick one area, read an article, watch a video, or even explore a project's white paper. The goal is not to invest necessarily, it's to educate yourself so that you can make informed decisions in the future. And if you found value in today's discussion, please share this episode with a friend, leave us a review, and subscribe so you never miss a conversation that can help you become a more inspired investor. A few more things before we part ways. Let's connect on LinkedIn. Find me by searching for Advisor Andy. Would love to connect there. Inspired Money is created and produced by me and Bradley John Eaglefeather. Bradley is behind the scenes during the live stream. He edited segments. Chad Lawrence does our graphics, animations, and editing. Last but most certainly not least, I want to give a big shout out to our amazing guests. Go follow their work and keep learning from the best. Dr. Merav Ozair. Learn about her work at drblockchain.io, where she explores emerging technologies and responsible innovation. She has lots of writings there. Sir John Hargrave, pre-order his upcoming book, The Intelligent Crypto Investor, and read his insights at bitcoinmarketjournal.com. Chris Kline, check out bitcoinira.com to learn how to invest in crypto for retirement securely and tax efficiently. And Nick Spanos, discover his pioneering work in blockchain at nickspanos.com. And make sure that you watch him in the documentary. Nick, what's it called? Banking on Bitcoin?
Yeah, Banking on Bitcoin, yeah.
That's on Netflix. Anything that either of you want to plug since you have made it to the end?
I know that Nick kind of left it, in a kind of like a pessimistic, like, oh God, we're going to lose everything. I've always been a little bit more of an optimistic because, I want to be, because I do believe in humanity and that we rise to the occasion eventually. And I think that with education, we do need to educate. That's what I've been doing for a long time. I think that also Nick with his center is trying to do that, and I can join forces, and we have to grow and educate more and more about that and the benefits and be make sure that Bitcoin will not get to what Nick is predicting. I hope not, and I have more faith that if people will better understand the benefit, the true benefit of this technology, and how they can really be independent of their identity, if their privacy, their security, their creativity, the work. I mean, everything about them. They can control everything, and no one has any control over that. No one, whether it's a government or the application or whatever else. They are the ones, who have the control over whatever they do, what their life, their identity, and everything. And if people really understand that, I believe that maybe we do have a more rosy future. I hope so.
Thank you for leaving us on a positive note. Thank you, Merav.
I love that. You're a powerful lioness, my dear. We need you in the space. Keep talking to me, please. Well, yeah, of course. It's not, that's not going to happen for a long time. And the more people get educated, like you said, the less probability that would happen, because just saying it is going to bring a big, social media is going to attack them and blah, blah, blah. And many people are going to find out. So, yeah, it's our job to protect this gift we're given from Satoshi and protect humanity and the future of humanity. And we need, lionesses at the gate, just like yourself, my dear.
Thank you. Appreciate it.
Thank you, Merav. Thank you, Nick. Thank you to John and to Chris, who had to hop off earlier. Thank you to you, Inspired Moneymaker, for joining us today. And together, we can be inspired on a path to invest better, to do more with our money, to have a bigger impact. Inspired Money returns next week on Wednesday, September 17th at 1 p.m. Our topic will be the art of wealth preservation, strategies for protecting and growing your wealth. I hope to see you then. Until next time, do something that scares you, because that's where the magic happens. Thanks, everyone.